This video will change the way you look at charts, and I will show you everything that you need to know to master technical analysis and price action. So this is a super special video. I've been trying to make this for quite a while. I finally got to it. And as you can see, there's a lot of things waiting for you. Concepts like momentum, chart analysis, wave analysis. We're looking at how to find the best key levels, patterns, candles, and so on and so forth. But I really want to stress that you need to make sure to watch the video until the end, because at the end, I need your input for something very important about this video and about this channel as well. So make sure to watch the video until the end, and I will need your input then. And let's get started. We are starting with the macro level here. So we are looking at the bigger picture, and then we are slowly going to drill down into the smaller and into the micro concepts, where we are done learning and understanding how to get into trades, what is a good trade trigger, and all the other good stuff. But we are starting here obviously with the macro, bigger picture first, smaller picture later. Momentum, chart phases, wave analysis. Let's get into this. So when we look at momentum stands for, or is often referred to as, trend strength and price strength in general. You're looking at how strong is the price moving. For that, you're looking at waves, at wave length, at candle length and candle size. And what we can often see, and what is very important, a very important characteristic, is that during a strong trend, you will often find candles that are increasing in size, or they are just larger in size compared to the previous sideways feints or consolidation or sideways market. We can see this very clearly here. You can see the market. There was a sideways range. When you draw a channel, you can see that the market was in a sideways range. It broke out roughly around here when the market broke out at this support and resistance area. And this is exactly the point where the bullish candles, the green ones, accelerated. They became larger, they become stronger, and you can see when we look at it, the bearish candles, the red candles, are becoming smaller and smaller actually. This tells us that the momentum is shifting towards a more bullish oriented market. The buyers are stronger, the buyers can push the price up easily, and the sellers are not able to push the price down. They are not able to create long consolidation phases, which is another important factor to consider when you look at the ratio between trends and consolidations, because a trend, obviously, it doesn't move in one straight line to your target. It goes in those waves, up and down waves. And during an uptrending wave, or an uptrending trend, you will see that the waves into the trend direction. So in this case, the waves into the upside are longer, and the consolidations, the short pauses, the short consolidations are much shorter. So you can see here the consolidations, they're usually just one or two red candles, and then you have another big candle. So this is a very important piece when you look at price action in general, when you are, for example, in a trend, in a trade, and then you see that the candles are still favoring your trade direction and your price direction. This is actually a good sign. Whereas on the other hand, you can see something is changing here. The price now, you can see we have multiple consecutive bearish candles. You can see we have 1, 2, 3, 4 bearish candles. And the last time that we have seen this was here in the middle of the range or during the downtrend. So this is already a first heads up that something is changing. We don't know yet that the market is going to reverse or whether it will, but we know at least that this is a first heads up. You can see then that the market eventually did roll over after another spike exhaustion, which we'll cover later. But this is a first important piece to the puzzle. And then here you can see when the market, and this is what we will get into wave analysis, that when the market isn't able to break into a new high here, and you can see we have multiple and strong consecutive bearish candles, this is a sign that the market may actually completely reverse. So momentum, trend strength, it looks at candle size, the development. Are the candles getting bigger and larger? What is the distribution? What is the ratio between the size of a bullish candle versus a bearish candle? Trend waves, wave analysis, that's already, trend waves versus correction waves, that's already a very good place to start. Momentum 2 I am a divergence trader. I have a system, I have many different systems, and one uses a divergence. And you can read divergences of your price charts without an indicator. And you only need to understand to read momentum and price strength. And it's very, very simple, very straightforward. So here you can see the market was in a full-fledged uptrend. You can see after strong consecutive bearish candles, only red ones. Now we are starting first to see strong bullish candles. This is the strongest first bullish candles that we've seen in a long time. Then you can see the bearish consolidations are much shorter, whereas previously you have easily 6, 7, 8 candles in a row that are red. Now we only have 2, and then we have only 3 very, very small ones. Then the uptrend resumes, very big, many, many more bullish candles. And then here, when we just look at the highs, you can see we have a higher high. Well, first from here to here, we have a significantly higher high. The price is easily able to break higher, less strong. So from here to here, it's obviously much shorter than from here to here. Then from here to here, it's even less short, or it's even smaller, and the price takes more time to get there. So from here to here, the price took quite a long time to make a small higher high, whereas here, in a short period of time, and here even in a shorter period of time, the market was able to push higher very, very quickly. Here's then the last piece to the puzzle. Again, much longer time, the price is not able to make a significantly higher high. Here, when we look at later at local double tops, double bottoms, spikes are another very important factor. And this is where spikes come in, or double tops. And this is a sign where the market is finally not able to break into a new high. And this would set up a bearish bias. So now you would be looking for shorts into the downtrend, because first of all, you can see we have multiple bearish candles, strong bearish candles. The price is not able to move higher, and it takes a lot of time for the market to make new highs, and it's barely able to do so. So we have a lot of things that are already pointing towards a more bearish bias, and we're just getting started. So once we make our way into the more advanced concepts, you will see how this all fits together, and you'll be able to look at charts very, very differently. Chart phases. We look at chart phases because we need to understand our trading edge. Our trading system is usually designed around a specific market phase. So some traders like to trade early trends, some traders like to trade breakouts, pullbacks, mature trends, exhaustions, and it's very important that you understand where on this spectrum is your trading strategy, because it will make finding or looking for trades much, much simpler. So when we look at a chart phase, the first important thing is that you need to realize that there are different chart phases. We have, for example, in this, we have a contracting range where the price action is in a downtrend, but it's a very weak downtrend. The price, when we look at the lows, the market is not able to move lower quickly, obviously, from here to here to here to here. The market always made lower lows, but barely. So the market is not very strong, which is something that we covered in our momentum part. Then we have a breakout. Some traders like to trade breakouts. Some traders like to trade pullbacks, which in this case actually didn't happen. So this is very important that if you decide to be a pullback trader, you have to be okay with sometimes missing trades and trends when the market just takes off. Then the later the trend goes on, and we will look at this when it comes to wave analysis in a moment, the more or the longer a trend goes on, the more mature it becomes. And especially in Forex, when a trend is very, very long and you have many trend waves, the likelihood for a reversal increases significantly. Because in Forex, it's not very common to see long trends that go on for hundreds or dozens of candles. So the longer a trend goes on, the more likely a reversal, or at least a pause, is. Then when the trend goes from an early trend to a mature trend, and then it keeps going, when you see exhaustion, double top, lower highs, the momentum is shifting, then we are looking at the end of a trend. This is where I have one of my strategies, is looking at end of trends. And then I look for breakout entries. I look for breakouts and maybe even pullbacks. Breakout, pullback, and then you are trading a new trend very early on. So right now for you, the task is to find out, to look at your last 10, 20 trades and ask yourself, what is the concept and what is the phase that I usually try to trade? And once you become clear about this, your whole trading will change, because finally you are able to understand, okay, what is it actually that my system is doing? And then we can go to wave analysis, where we can time our trades with the right wave, because there's a huge difference whether you trade early or late waves, depending also on whether you are a trend trader and exhaustion trader. So for me, for example, I like to trade early trends, very early trends, but not early in a way that you look at wave one. So when you look at trends, as I said, they usually go in waves, up and down waves. And when you see that a previous trend is coming to an end, you have your first impulsive wave. This is a new trend wave. Obviously, we don't know that until the market breaks out. But once the market has broken out, we can look back and we can identify the new wave count. We have wave 1, we have wave 2, and we have then wave 3 and 4 and 5 and so on. Very important. Entering a breakout on wave 1 may not be as good because the market is already quite overextended. You can see we have 1, 2, 3, 4, 5, 6 bearish candles. Do you want to enter short after 6 bearish candles? There are ways how to do that, and this is what we teach in the masterclass. But sometimes it's better to wait out until the correction wave has been completed. Wave 2, wait for the market to make its little wave against you. And then get in very early on the breakout at wave 3. So you can see this is an early trend trade at the end of wave 2, beginning of wave 3, very early on in a new trend. And this is what you want to do. Again, we can also combine our momentum knowledge already here. We have a very strong selling sequence. We have multiple bearish sequence candles in a row, which we haven't seen in the entirety of the whole previous trend. So clearly something is changing, very strong momentum. And then here the market is pausing, but the buyers are not able to take over. If the buyers were able to take over, or more interested at least, the wave 2 would go much higher, and the price would rise much stronger, much quicker, and much higher. So already we can understand that, okay, wave 2 is not really strong. This is further indicating maybe more bearishness to come. And then this is where we are. Here, another example, wave count, you have a downtrend, and then once, I always wait for trends to be over to find new trends. You have your wave 1, wave 2, wave 3, and then so on and so forth. So again, the takeaway from this video is you ask yourself, what type of trader do you want to be? What is the chart phase that you want to be? A trend trader, early trend, late trend, pullbacks, breakouts. What is your trading style? Don't try to trade everything at once. Really understand that there are different phases, and every phase requires a different approach. Obviously, you need to use a different approach when it comes to pullbacks with breakouts versus late and early trends. And then you will understand price action in a much different way. Once you are only looking at one specific scenario, let's say you're only looking at breakouts, you will suddenly start to realize and notice little nuances here and there that you'll be able to pick up, which you weren't before because you're all over the place. I know many traders that trade 5, 6 different systems, and then they can't even focus on one because they're all over the place, and then they miss important clues. Don't be that trader. Be very clear. And now I need your help. For the next part, as I said, we're going to take a look at macro to micro. So we covered the main concepts. Now we're going to take a look at key levels. We're going to take a look at support and resistance, supply and demand, local double tops, and local double bottoms. Which of those do you think is most important? Which do you think you have the least knowledge, and where do you think you want to know more about? Let me know for those 3 which you find most interesting, and what exactly is your struggle right now, or what is your question around those. And then next week, I will do another video where we'll take a look at the key levels. And then after that, we are going to take a look at patterns, candles, tools, indicators, and so on and so forth. So let me know in the comments below. I really need your input. I look forward to hearing from you. I look forward to making this special video series. Until the next time, happy trading.